I'm Chad Main, the founder of legal services company Percipient, and this is Technically Legal, a podcast about legal technology and innovation in the legal industry. Today's episode, I have a conversation with Mike Suchsland. He and I talk about the state of investment in legal technology in 2022. My guest today, Mike Suchsland, has been in legal tech before it was really even a thing. Literally. Starting in the 1990s, Mike began his career with Wolters Kulwer and ultimately ended up with Thomson Reuters, where he climbed the corporate ladder. At Thomson, he started as the head of legal strategy for the legal business, then moved to small law business, ended up running the corporate legal unit, then he went over and ran the legal education section, which included Barbary at the time. And all this culminated in Mike running the whole legal show for Thomson when he became the president of legal business. In that role, Mike was responsible for 10,000 employees and over $3 billion in revenue. In 2014, Mike left Thomson and ultimately ended up knee-deep in the growing legal tech world, where he is and was a board member for several legal tech companies like Litera and iPro. And now he spends most of his time investing in legal tech companies with VC funds, Bridge Investments, and the aptly named Legal Tech Fund. On today's show, Mike and I talk about how he got into legal tech investing, what investors look for in legal tech companies, the state of investing in legal technology in 2022, and whether there really is such a thing as a legal tech unicorn.
I had just assumed that I would go on and be a CEO of another company, but I became increasingly engaged in talking to private equity firms around doing deals in the space. And like any good networker would do, I was giving a lot of my time away for free. And they kept asking for more and more of it. So ultimately, I kind of gingerly, put my toe in the water. I said, well, I'm happy to advise you, but will you pay me? And they said, absolutely, we'll pay you. So that kind of launched what was the genesis of Joplin Consulting.
Which you still have.
Which I still have. And so Joplin started out life doing M&A deals for private equity. And part of the value proposition with the private equity firms I worked with was that if we find a deal, it's successful, and you like me and I'd like you, I'd love to be on the board of the entity that we acquire. So that led to several board positions over the years of companies that I worked with private equity on.
Now, these companies, I know most have been legal tech, but was it solely legal tech companies that you worked with?
Solely legal tech. And then parallel to that, I had joined a venture capital firm as a limited partner. And I just did it on a lark. It was a small investment, but I started attending their meetings and learning about venture capital. And then along the way, I had some former colleagues from Thomson Reuters that were interested in building a business, so I offered to invest in them. And as I learned the venture capital ropes, I became a more active angel investor. And ultimately, I set on a path with a couple of other partners to put together a venture capital fund. And we ultimately didn't succeed in raising the amount that we wanted to raise to support three partners focused on legal tech. But as we were kind of parting ways, I had sat on the board of a legal tech company called Q Discovery. They were owned by a combination private equity venture capital firm, and they said, come on to our venture capital fund as a partner. And
this is Bridge, right?
Bridge, right. Yep. Come on as a partner and you can help us source deals and participate in the process. So I did that and have had a ball having kind of an official capacity and platform to talk to entrepreneurs, learn more about what they're doing, and follow trends in legal tech. And it's a nice synergy to be participating both on the venture capital side and the private equity side, because many of these VC opportunities that are invested in early ultimately become private equity targets. So they become fuel for the private equity fold-in process in the larger entities.
And you're still with Bridge, but you also recently joined forces with the Legal Tech Fund. How'd that come about?
I did. So this may be groundbreaking in terms of me being a partner in two different venture capital funds. But it makes sense when you peel it apart, because the Legal Tech Fund is a much larger fund than Bridge and has the capability to lead deals at the Series A level. And Bridge is much more of a follower fund. So the way that we've kind of decided to work together is that in cases where the Legal Tech Fund leads, Bridge will be given the opportunity, if interested, to follow, and the resources of the two funds in terms of diligence and overall knowledge of the legal space can be combined. And it's better for entrepreneurs to essentially have two knowledgeable funds invested that have diversified experience than to just have one. So we think it's going to work.
And LegalTech Fund obviously is focused solely on legal tech, but Bridge is not only focused on legal tech.
So Bridge is focused on tech-enabled consumer as well as legal tech. And so there is a divided focus there. Those are the two legacy areas that they've had success in. And I think that was another reason that bringing the focus of the Legal Tech Fund is probably going to help Bridge as it deploys capital in the legal space, but is also focused on other areas.
And you're still on a couple boards, right? iPro, and I saw SurePoint.
Yep, iPro and SurePoint. iPro, e-discovery technology software, competes with some of the name players like Disco and Relativity. And then SurePoint is workflow in the medium law space. Sits kind of between Clio at one end and Elite Natarant at the other end. So kind of that medium law firm space. And we've had great success in building a book of business that the other folks haven't been able to penetrate.
You've been involved in investment and building legal tech businesses basically since it became a thing, from the very beginning. So you've seen how things have changed. What's changed most? In 2021, what is different than it was in, say, 2010 or even 2015?
Yeah, I mean, what a big question, because I think if you look back over time on the demand side, lawyers in 2010 really resisted the adoption of technology, and that's the simplest way to put it. And, attorneys are not trained as technologists. There's not a technology track, or there wasn't then in law school. There was not a positive track record on the role of technology in driving success within a law firm. There was investment in on-prem software to run applications, but the SaaS movement hadn't penetrated the legal industry to the same degree.
There was still pushback in legal on SaaS because they were worried about security, which
exactly right.
I could talk about that one for hours, but we
won't
touch that one.
And, it's an eat what you kill environment. So particularly in smaller firms, the willingness to invest in technology really wasn't a proven model when those dollars were coming directly out of the dinner table in the lawyer's own income stream. So I think all of that success was breeding a certain degree of complacence in law firms that the existing model was working. And maybe there was some acknowledgement that the legal industry was behind the rest of the world, but there was not a significant spur for innovation that was occurring as a sea change moment, perhaps like it was where you have, Amazon Web Services and the like impacting the rest of the world. But you do have the advent of cloud-based computing, which removed cost and knowledge barriers. And I think the other force that happened is that on the supply side, the rise of legal tech investment. I'm a senior advisor to Warburg Pincus, which is a multi-billion-dollar private equity fund with a team dedicated to the legal space. And even when I left Thomson in 2014, I sat down with the Warburg Pincus folks and asked them about their willingness to invest in the legal space. And they said, we're not that interested in it because it's not large enough. And we really want to see, we want to dedicate a team and outside advisors into a space that's going to actually shift the bottom line for the fund as a whole, which was a multi-billion-dollar fund. And now, a short 6-7 years later, that has definitely happened. The amount of investment has skyrocketed, and we're at a point in time today where we have multiple unicorns that have emerged that would have been unthinkable even 5-6 years ago.
Unicorns. Do you really think these are billion-dollar companies?
You're putting me on the spot there, Chad. So I'll give you an answer with data. If you look at what's happening in the public markets, public enterprises, and a lot of the IPOs are trading at multiples that are far higher than what companies are trading at in private transactions. And in fact, that's what has bred the emergence of SPACs, is that it's simply possible to get a much higher valuation on the public market. So you do have Disco trading publicly. You have, several other recent nascent businesses that have gone public. And I think there is a question around the sophistication of the public market investor, around their understanding of the legal market, and trying to benchmark those businesses to perhaps SaaS software businesses in other markets, and not having, full appreciation for the comparables. So I don't know. I think that the strategy for the market to optimize the opportunity is that the best exit right now is an IPO. If you have the scale and where you have 18 months of audited financials and the wherewithal, or if you don't have the 18 months, back it out and make it happen.
The market for legal is never going to be as big, obviously, as a consumer-facing product, or even other business tech, right? So by default, investing in legal is going to be on a smaller scale in general.
Yeah, but you can probably say that about a lot of B2B versus B2C enterprises. So B2C, naturally, you have huge consumer markets that in many cases have unicorn potential, maybe higher risk because there's more competition for the consumer's dollars and probably different success drivers. But at the end of the day, the legal market is now large enough that multiple multi-billion-dollar private equity firms are interested. You have Warburg that's participating, HG that just recapped Litera. Insight has had several successful exits. K1 has participated and done quite well. So you now have the attention of players who participate across all markets focused on legal because they see the opportunity there. So sure, it probably doesn't have the vast potential that a consumer market does. But I think that 10 years ago, people outside-in observers would have said about the legal market, well, on the information side, you have an oligopoly of Kulwer and Thomson and Reed Elsevier. And then on the software side, you really have the e-discovery players, and that's kind of it. And now you have a situation where you've got contract management and you have litigation and transaction workflow. You have multiple blossoming areas of investment as law firms and corporate legal departments are on a race to automate and to manage process and workflows for quality and efficiency.
And even within legal, there are some products that have broader appeal. To legal, like Clio comes to mind. Versus where we talk about e-discovery, there's multiple uses for e-discovery software, but in general, you need to be a litigator and have that type of litigation that requires it. So even within legal, there's varying degrees of the scope of a product, right?
I think that's absolutely true. Even if you look at e-discovery, people think of e-discovery as mining a database for information. But as you think about what e-discovery is, as you moved earlier and earlier in the value chain, a lot of e-discovery now is what are the policies and procedures that a corporation needs to have in place for maintaining its data set and for the ability to retrieve that data set. And that turns into what are our compliance rules and regulations? And that turns into what compliance software do we have? And so you find that LegalTech, I think the definition is expanding dramatically. And LegalTech can now mean compliance. It can mean financial management. Blockchain is becoming an important component of LegalTech as we incorporate smart contracts into legal workflow. A lot of the workflow players are now incorporating payments into their LegalTech value proposition, which would have been unheard of even 2-3 years ago. And all of those opportunities are creating enormous value creation sets of new fields to plow that simply weren't available before.
When we come back, Mike tells us what new legal tech offerings excites him and how the best lawyers of the future will be tech-savvy problem preventers rather than backward-looking problem solvers.
This podcast is brought to you by Percipient, a legal services company powered by technology. Percipient helps legal teams tackle legal operations, electronic document review, and process automation. Percipient services include managed document review, subpoena compliance, cyber incident response, and also helps legal teams provide clients with process-driven legal support. To learn more, visit percipient.co. Percipient. Legal services powered by technology.
We'll get back to my conversation with Mike Suchsland in just a second, but before I do, I want to let you know if you want to learn more about Mike, or any of our guests for that matter, and find out more about the stuff we talk about on the podcast, there's a dedicated episode page at tlpodcast.com. Also, if you want to subscribe, you can catch us anywhere you get your podcasts, Apple, Spotify, Google, all the rest of them. And while you're there, if you leave us a good review, we'd really appreciate that. Okay, let's get back to my conversation with Mike Suchsland about investing in legal technology.
The one area that is the most exciting right now is contract management. You have players ranging from tiny startups all the way to players that have $100 million of revenue. You have different ways that they're playing the phenomenon. There are pre-signature players. There are post-signature players. There are contract analytics players. There are players who are trying to bring all of these things together in integrated solutions. And I think contract management is kind of in the same stage that e-discovery may have been 5 or 10 years ago. Tons of players, lots of consolidation opportunity. Probably a few big winners will emerge at the end of the day that will be profitable and will become, Disco's already a unicorn traded on the public markets. And that's only one of 5 or 6 major competitors in the space.
What's flying under the radar? What's bubbling up? What have you seen lately?
I think that the trend we'll see is that the former dominance of large players who owned most of the pieces of the market is going to fade over time. So if you go back to the fact that Thomson Reuters, who during my term, we had a philosophy that we were focused not on spending a ton of money innovating outside our core space of information, but carefully monitoring the market. And then any startup that was successful, we'd simply buy them. Over my 12, 14-year career at Thomson Reuters, I probably ended up buying 50 companies that really complemented the core information business with a lot of software applications. But at some point in time, that engine becomes so large and all these companies become focused on sure things. So they begin to buy back their own stock as dividends are being paid out. So the return on investment based on buying back their own stock is a surer thing than making a risky investment in a startup. So that investment level began to decline. And as it declined and other private equity players emerged, other entities came to fruition. They're now becoming, sufficiently of scale that they're beginning to challenge the big three in terms of their ability to maintain their traditional market dominance. And I think, Latera is a good example of a company that's well into the 9 figures of revenue, just got recapped by HG, so has a whole new war chest of funding to go forth and continue to expand. And they're beginning to threaten some of the core value propositions of the big three, thinking about transaction workflow, litigation workflow. So I think this subtle shift of power to well-funded private equity companies that are gaining mass, it's slowly overtaking the industry. And I don't think that, the traditional dominance in information by Kulwer, Reed Elsevier, Thomson is threatened. But what I do think is that the workflow component and the software component of workflow is becoming more democratized across the industry. And that